Hey guys, this is Dr. Ricky Keys. Today I'd like to do a video on the inherent bias of credit scores. There was an article, and I'm going to show you in a minute, by Forbes, which is normally not one of the most diverse and open-minded periodicals or magazines or whatever. And it said that there are some challenges with the credit scoring model, and the challenges adversely affect one group in particular, or two groups, the Hispanic community and the African American community. So check out this piece that I'm doing, and I'm also going to show you the average credit score in the city of, the metro area of Atlanta. So it'll show you the clear challenge as it relates to the racial bias of credit scores and the impact that it has on these specific groups. But as I said, I was able to get the Equifax data, and it shows that certain communities are significantly adversely impacted by bad credit, and the impact is just absolutely amazing. So check this video out. Hopefully it'll be something informative and help you to make some decisions as to whether you want to monitor your credit and whether you want to make some specific changes to improve your credit. Hey guys, Dr. Ricky Keys here. First of all, I want to let you know I believe in equity of opportunity and not equity of outcome. Eventually, I'm going to explain what that means. So let's start with just having this conversation. You see the thumbnail, you see the information that we have identified. I believe that this is a critical issue. I believe that we are facing a set of challenges that must be addressed, not should be, must be addressed. And the issue that I speak about is, these credit rating agencies, and they're doing the wrong thing. Equifax in particular was caught, giving the wrong credit score to millions of Americans. And again, this is the article that I'm going to spend a lot of time talking about. Equifax issued wrong credit score for millions of consumers. Now, this has an adverse impact on just generally people, but it specifically has an adverse impact on African Americans and Hispanic Americans. Now, what I want to do is, again, kind of show you this article. I'm going to read it a little bit later on, but I wanted to give you some backdrop and show you how credit scores disproportionately affect communities of color, especially African Americans, but it also affects other demographic populations. But let's look at this article. It says, from inherent racial bias to incorrect data, the problem with current credit scores models, the credit scoring model. This is something I believe needs to be addressed. We will ultimately have to have a conversation with elected officials and policymakers about the challenge of how credit scores are evaluated, how they're tabulated. So there's an algorithm, and a bunch of data is just thrown into this, what I believe is a black box, this algorithm, and it spits out a credit score. And unfortunately, if you don't know what you're doing in terms of the right mix of inputs and outputs, the algorithm is going to say that you have bad credit and you're not credit worthy. And this is a big challenge, as I said, for communities of color, poor people, people who are unemployed and other things. I was able to get the Equifax credit scores, and I'll go into that in a second, but we were able to get the Equifax credit scores by zip code in the Atlanta metro area. And I'll show you that in a second. I'll map it out for you. So a good credit score is a gatekeeper to wealth, career opportunities in housing in the U.S., but some say current credit score models aren't always fair. Credit scores have gotten attention over the past few years from critics decrying their accuracy and their use of data that is reflective of historical bias while omitting certain types of data rental and cell phone payments that might include a broader swath of people, include Black and Hispanic consumers. Other complaints include the lack of public scoring models and the fact that scores are used to determine things that have nothing to do with credit, like getting a job and also getting insurance. And suppose you're on one of approximately 26 million Americans who are credit invisible, meaning that you have no credit history with any of the nationwide credit reporting agencies. In this case, you're essentially locked out of the current credit scoring system, according to the Consumer Financial Protection Bureau. Black and Hispanic people are those living in low-income neighborhoods have high credit invisibility. Again, there was another article. Okay, so credit scores range from 300 to 850. And, there was a recent article that I cited on the last video that I did that said that 54% of Black Americans have a credit score of 650 and below, which is considered a poor credit score. And 41% of Hispanics have a credit score of 650. Again, a low credit score. So again, this is the backdrop. This is the challenge that I believe we are facing. Now, this is an article by Forbes, which is historically not one of the most open-minded organizations or publications in the world. So this is a really important article. It's highlighting some major challenges with the credit scoring model, something that I believe ultimately has to be addressed. So let me go ahead and give you a backdrop, and then we can get into the main article. Again, both of these articles will be linked below. I will also see if I could find a way to distribute this data so that you could see how credit scores are impacting certain communities. So let's look at this. Again, this is original data that we were able to get from Equifax, the specific organization that is highlighted as saying that they were providing wrong credit scores to millions of consumers. So this is the Atlanta metro area. Again, Atlanta, Newman, Sandy Springs, Smyrna, again, the entire metro area. And what we have done is we were able to identify the average credit score by zip code, and the lighter shaded colors have the lower credit scores. So it ranges from 643 and below to 644 to 666, 667 to 688, 689 to 714 and above. So the darker areas are better credit score. The lighter areas are poor credit scores. So again, these areas these darker areas right here and all the way down here have better credit. Again, moving from the darker shades to the lighter shades. Again, these areas and these areas have poor credit. And then what we'll be able to do is demographically show how this exists in real life, looking at other demographic factors. So again, this is the average credit score by zip code in the Atlanta metro area, and this is data that was actually provided to us by Equifax. The next map shows the educational level. Again, remember the northern part of Atlanta had better credit scores. So again, the darker shaded areas are higher educated. These are people who have 25 years old plus with a college degree. So these are highly educated areas, the darker shaded areas, and the lighter shaded areas are areas that have a lower percentage of the population by zip code that have educational levels, college education. So again, darker areas with higher education, lighter shaded areas with lower education. This next map shows the median income. Again, as we said with the education and with the credit scores, the darker shaded area has a higher median income than the lighter shaded areas, which is the southern part of the Atlanta, Fulton County area. So again, lighter areas, lower income, darker areas, higher income. This next map shows the unemployment rate. And again, the lighter shaded areas in this case are lower unemployment, and the darker shaded areas with these darker green areas have a higher rate of unemployment. This map is not as clear because the diversity in the numbers are so high, but if we were able to, substantially reduce the range between these, you'll see a significant difference between the darker areas or the northern part of Atlanta versus the southern part. Again, even though we have this range, this area here is between 10.5 and 22% unemployment. So again, still significant unemployment in the southern part of the city. This map shows the poverty rate, and it's almost a mirror image of this map because the lower unemployment, poverty areas are in the northern part of the city, and this area, same area that we spoke about, low education, lower education, median income, poverty, unemployment, all of those things are ubiquitous. So now this is the African American. African Americans represent a significant percent of the population in the Atlanta metro area, but as you can see, this area has a significantly higher percent of the population by zip code that are African American, and this is a more diverse area, specifically white and other populations. And finally, this map, these last two maps, just shows that there is a consequence to this situation. This is the average credit score, the same map that you saw at the very beginning, but it shows the density of where banks are. So these low areas with it almost looks like the red areas is a higher concentration of banks, all the way to the lighter blue areas, which shows that there's a dispersion, if you will, of banks. But regardless, it shows that the highest concentration of banks are located in those areas with higher credit scores. This is the city, but the density of banking availability is significantly less for the areas that are in the lower credit score area. And then finally, when you talk about payday, there is no payday lending in the city or in the state of Georgia. So if you're talking about title loans, you could see that there's a significantly more diverse distribution of non-bank services, specifically title loan services, in the southern part where the credit score is significantly less. The concentration is much more in those areas that have lower credit scores. So now again, what I've done with these few maps is to show you that credit scores are just not numbers that are arbitrary. They have a significant impact on consumers' lives. So let's go back to the first article. And again, this shows you how this Equifax fiasco, I believe, has significantly impacted the very communities that cannot afford to have their credit scores damaged in any way. Equifax issued wrong credit scores for millions of consumers. Now, let's pay attention to a few paragraphs here. Credit giant Equifax sent lenders incorrect credit scores for millions of consumers this spring in a technology snafu with major real-world impact, as I showed you. In certain cases, the errors were significant enough. The differential was at least 25 points for around 300,000 consumers. That sum would be borrowers may have been wrongfully denied credit, the company said. So these are consumers that apply for loans, and when Equifax sent the scores for these individuals, they were wrong by 25 points. And the result is these people, large percentages of these people, were denied access to what one would consider mainstream financing, or they were denied altogether. even if they were given credit, sometimes that credit was at a significantly more expensive rate. So this is a big problem. The problem occurred because of a coding issue. We really don't care what the issue is. The issue is that these consumers were denied credit or were given much more expensive credit. Why Equifax did not specify dates or figures, a June 1 alert from housing agency Freddie Mac to its clients said Equifax told the agency that 12% of all credit scores released from March 17 to April 6 may have been incorrect. Equifax wrote that there was no shift in the vast majority of scores and that the credit reports were not affected. Well, I'm not going to say what I really want to say. I think it's an outright lie that, you know, the very people who who could not afford to be affected by this credit score error were the ones who were actually impacted by it. And again, the data that I showed you demonstrates that it is a major problem. So I will link this and the other article in the description. This is a real serious issue. Again, this is an algorithm, a computer that's actually computing your scores, and it weighs certain factors. But not only to have that as an issue and people not understanding this issue of credit scores, but then to have, you know, this kind of error, and they've had these kinds of errors in the past, is something that's significantly challenging for the very people who cannot afford to have it. Again, I would encourage you to actually send this to someone, show them that, you know, this is a major challenge that has to be addressed on a global sense, legislatively or in policy. But just like that, I believe that we need to check our credit score, monitor our credit, make sure that there's accurate, you know, the credit score is accurate. And candidly, that's a challenge because often we don't even know what should be used, the combination of factors that should be used to affect our credit score. So with that, my name is Dr. Ricky Keys. I look forward to seeing you in the next video. Please like, share, and comment on this video. Please share it with someone so that they can understand that, you know, these credit scores are, while they are supposed to be accurate and scientific, sometimes, a lot of times, we have seen recently, there are snafus, and it will affect your ability to get access to credit and then get right credit so that you won't have to pay significantly higher rates for your credit. So with that, my name is Dr. Ricky Keys. I look forward to seeing you in the next video.